Investing in stocks for passive income is an excellent way to build wealth over time. With the right selection, investors can earn steady dividends that provide a reliable income stream. Here are 10 stocks that are particularly well suited for generating passive income in 2024. 10. Apple Incorporated, APL. Apple Incorporated is a technology giant renowned for its innovative products and strong brand loyalty. While it has traditionally been viewed as a growth stock, Apple has increasingly attracted income investors due to its consistent dividend payments and significant share buybacks. The company's robust cash flow, generated from high-margin products like the iPhone, Mac, and services like the App Store and Apple Music, enables it to maintain and potentially increase its dividend. As of 2024, Apple offers a dividend yield of approximately 0.5%, and its strong financial position allows for the continuation of these payments, providing a reliable income stream. Additionally, Apple's commitment to returning capital to shareholders through buybacks further enhances shareholder value. 9. Coca-Cola Company, KO. Coca-Cola is a globally recognized brand with a diversified product portfolio that includes beverages such as sodas, juices, and energy drinks. The company has a strong history of paying and increasing dividends, making it a dependable choice for passive income. Coca-Cola's extensive distribution network and brand strength ensure a steady demand for its products, supporting its ability to generate consistent cash flow. 8. Johnson & Johnson, J&J. Johnson & Johnson is a healthcare giant with a diversified portfolio that includes pharmaceuticals, medical devices, and consumer health products. This diversity allows J&J to mitigate risks associated with any single market segment. J&J's long history of paying dividends underscores its financial strength and stability. The company is a dividend aristocrat, a status it has earned by increasing its dividend for over 50 consecutive years. This consistent performance is a strong indicator of J&J's commitment to returning value to its shareholders. As of 2024, the company's dividend yield stands at approximately 2.5%, providing a solid income stream for investors. The payout ratio is maintained at a sustainable level, ensuring that dividends can continue to be paid even during economic downturns. Moreover, Johnson & Johnson's robust balance sheet, with substantial cash reserves and manageable debt levels, further enhances its ability to sustain and grow its dividend. The company's ongoing investments in research and development, coupled with its strategic acquisitions, position it well for future growth. For passive income investors, J&J offers both stability and the potential for long-term dividend growth, making it a compelling addition to any income-focused portfolio. 7. AT&T Incorporated, T. AT&T is a telecommunications giant offering a wide range of services, including wireless communications, broadband, and entertainment. Despite facing challenges in recent years, AT&T has maintained a high dividend yield, making it appealing to income investors. The company's focus on stabilizing its operations and reducing debt could further enhance its ability to sustain its dividend payments. 6. Realty Income Corporation. Realty Income Corporation is a real estate investment trust, REIT, known for its monthly dividend payments, earning it the nickname, the Monthly Dividend Company. The company's portfolio primarily consists of commercial properties leased to high-quality tenants on long-term agreements. These tenants include well-known companies across various industries, such as retail, industrial, and healthcare, providing a diversified and stable revenue stream. The REIT structure requires Realty Income to distribute at least 90% of its taxable income as dividends, making it an attractive option for income-focused investors. As of 2024, Realty Income offers a dividend yield of approximately 4.3%, significantly higher than the average yield of many other income stocks. This high yield, combined with the company's commitment to monthly dividend payments, provides a consistent and attractive income stream for investors. Realty Income's disciplined investment strategy and focus on high-quality properties and tenants contribute to its financial stability. The company maintains a conservative balance sheet with a manageable level of debt, ensuring its ability to continue paying and potentially increasing dividends. For passive income investors, Realty Income offers the dual benefits of a high yield and monthly payments, making it a compelling addition to an income-oriented portfolio. 5. Tesla, Incorporated, TSLA. Tesla Incorporated is a leader in the electric vehicle, EV, industry and is known for its innovative technology and ambitious vision for a sustainable future. The company produces electric cars, battery energy storage systems, and solar products, significantly impacting the automotive and energy markets. Tesla has experienced substantial stock price appreciation and has become one of the most valuable companies in the world. For investors, Tesla's financial performance is a key point of interest. The company has demonstrated impressive growth in revenue and profitability. As of 2024, Tesla's gross profit margin stands at approximately 26%, indicating the company retains a significant portion of revenue after accounting for the cost of goods sold. The net profit margin is around 12%, reflecting Tesla's ability to convert revenue into actual profit after all expenses are deducted. These margins are strong for an automaker, highlighting Tesla's operational efficiency and pricing power in the market. 4. Procter & Gamble Company, PG. Procter & Gamble, P&G, is another dividend aristocrat known for its stable and growing dividend payments. The company operates in the consumer goods sector, producing essential products such as household cleaning supplies, personal care items, and health products, which enjoy widespread consumer trust and loyalty. P&G's consistent demand for its products contributes to its ability to generate steady cash flow, which in turn supports its dividend payments. The company has a long history of paying and increasing dividends, with a track record of over 60 consecutive years of dividend growth. As of 2024, P&G's dividend yield is around 2.4%, offering a reliable income stream for investors. The payout ratio is conservative, allowing the company to maintain and potentially increase its dividend over time. 3. Chevron Corporation, CVX. Chevron Corporation is a major player in the energy sector, involved in oil and gas exploration, production, refining, and marketing. With its extensive global operations, Chevron has built a strong reputation for reliability and efficiency. The company has a long track record of paying dividends, offering a current yield of approximately 4.1% as of 2024, which reflects its commitment to providing consistent returns to shareholders. Chevron has managed to navigate the inherent volatility of the energy market effectively thanks to its strategic investments and operational excellence. As the world transitions towards renewable energy, Chevron is positioning itself for long-term growth by investing in cleaner technologies while maintaining its commitment to rewarding shareholders. This balance of sustainability and reliable dividend payments makes Chevron an attractive option for investors seeking both income and growth in their portfolios. 2. AbbVie Incorporated, ABBV. AbbVie Incorporated is a global pharmaceutical company with a strong focus on research and development. Known for its blockbuster drug Humira, which treats autoimmune diseases, AbbVie has built a robust pipeline of new drugs and treatments. This focus on innovation helps ensure the company remains at the forefront of the pharmaceutical industry, addressing a wide range of medical needs. AbbVie's consistent cash flow and commitment to returning value to shareholders through dividends make it an attractive option for income-focused investors. As of 2024, AbbVie offers a dividend yield of approximately 4.3%, one of the higher yields in the pharmaceutical sector. The company has a solid track record of dividend growth, having increased its dividend annually since its spin-off from Abbott Laboratories in 2013. AbbVie's payout ratio remains at a sustainable level, ensuring that it can continue to provide attractive dividends while investing in future growth. 1. NextEra Energy Incorporated, NE. NextEra Energy is a leading clean energy company and the world's largest producer of wind and solar energy. The company is at the forefront of the transition to renewable energy, driven by its substantial investments in wind and solar projects, which position it well for future growth as global energy markets shift towards cleaner sources. NextEra Energy has a strong track record of dividend payments and growth, with a history of consistently increasing its dividends to shareholders. As of 2024, the company offers a dividend yield of approximately 2.1%. This steady dividend growth, combined with its commitment to expanding renewable energy infrastructure, makes NextEra Energy a compelling choice for investors seeking reliable passive income and long-term capital appreciation. Key considerations for passive income investors. When selecting stocks for passive income, it's essential to evaluate various factors to ensure reliability. The annual dividend payment relative to the stock price is crucial to determine if the income is sustainable. Assessing how a company grows its dividends reflects its financial health and commitment to shareholders. The proportion of earnings paid out as dividends should be manageable enough to support future growth and investment. Evaluating the company's overall financial health, including its balance sheet, cash flow, and earnings stability, is necessary for maintaining dividends. Additionally, considering the stability of the industry in which the company operates is important, as sectors like healthcare, consumer goods, and utilities generally provide more dependable income streams. Investing in dividend-paying stocks can provide a steady stream of passive income, especially when you choose companies with strong financials and a history of paying and growing dividends. The 10 stocks listed above represent a diverse range of industries and have demonstrated a commitment to returning value to shareholders through dividends. By carefully selecting and monitoring such stocks, investors can build a robust portfolio that generates reliable passive income. Thanks for watching. Don't forget to like and subscribe for more content.